So when we look at the Ethereum Treasury space, Bitmine has already separated itself because it's far larger than anybody else by almost 3 times.
Yeah, it is.
And the stock is one of the most liquid stocks in the world. So a way to measure that is trading volume per day. Bitmine trades at about $2.6 billion of stock every day. It is the 20th most traded stock in the United States.
At values between $4,700 and $4,800, Ethereum is once again on the brink of history. Retesting its legendary peak of $5,000 in 2021 is only a few candles away. What is the reason behind this charge? Contributing factors include institutional demand ETF inflows of more than $11 billion this year, and the potential for a rate cut by the Federal Reserve in 2025. Together, these elements are reducing the amount of supply and circulation, raising investor demand, and bringing Ethereum closer to the moment of actual price discovery. But chart data is only one aspect of this explosion. Analysts say we could be about to experience a financial supercycle, a once-in-a-generation upheaval similar to the one that happened in 1971 when the dollar broke its link with gold. Today, Ethereum is at the center of the tokenization revolution that is bringing stable currencies, bonds, stocks, and even real estate into its orbit. While 2021 was merely hype, 2025 felt like fate. According to Tom Lee, the answer is clear. Exposure to cryptocurrencies is not the only thing that interests Wall Street. Since Ethereum offers smart contracts, that's what it wants. While Bitcoin may remain the digital gold standard, Ethereum is the engine powering the rebuilding of the world's banking system. From asset tokenization to decentralized applications, the biggest companies in the world are already building their foundations on its network. But opportunity also comes with danger. Both the fear of missing out and the danger of making the right bet in the wrong way are real. Today, investors are questioned about more than simply what to buy. It's about buying it, keeping it, and protecting it. When the tide inevitably turns back, Ethereum's rise to $5,000 might signal the beginning of something far larger: the architecture of the financial system of the future. Let's now examine excerpts from Tom Lee's insightful market analysis for more context. Please remember to like, subscribe, and enable notifications for more in-depth material. I appreciate you returning. Go through the rest of the video.
The company is one of the most profitable companies in America today. Yes, that's a great question, because someone's going to say, well, if Ethereum can go up a lot, why don't I just buy Ethereum? And one of the differences is that a digital treasury like Bitmine is actually growing how much Ethereum you have per share. So I'll give you an example. On July 8th, when we closed on that initial transaction for taking over Bitmine, or transforming it to a Bitmine treasury, an Ethereum treasury, there was $4 of Ethereum per share held at Bitmine. So imagine someone could say, I could buy $4 worth of Ethereum or buy 1 Bitmine share. As of August 24th, Bitmine held $40 of Ethereum per share. So it rose by 10 times. But if someone bought the Ethereum itself, or they bought the Ethereum ETF, they'd still only have $4 of Ethereum per share. So you can see that a treasury company is growing your Ethereum holdings per share. That's why MicroStrategy stock did better than Bitcoin. In August 2020, MicroStrategy stock was $13. Today it's $335. It's gone up by more than 25 times. The price of Bitcoin has gone from 10,000 to 110,000. So it's gone up by 11 times, but MicroStrategy stock's gone up by 25 times. And that's because MicroStrategy, as a treasury company, has grown your Bitcoin per share. And Bitmine is growing your Ethereum held per share every week. It's growing by roughly 50 cents per day.
Okay.
And today the stock's $43. So it's gone up by 10 times. Ethereum has risen by 50% in that period of time. So Bitmine has outperformed Ethereum. Actually less.
Oh.
Because you're growing your Ethereum held per share. So if you took the original example.
Yeah.
Okay, so let's say on July 8th, you had $4 of Ethereum or $4 worth of Bitmine stock. And then let's say Ethereum went down 50%. The original person only has $2 of Ethereum because they bought it for $4 and it went down 50%. But today, someone has $40 worth of Ethereum, and if it goes down by 50%, it's $20 per share. So you actually made money even though Ethereum fell 50%.
Wow.
So it's a crypto treasury that's properly managed and executed will vastly outperform an ETF or the Ethereum itself. That's why MicroStrategy as a company is larger than any Bitcoin ETF. Because institutions realize it's better to buy MicroStrategy than to buy a Bitcoin ETF. Yes, it's very simple. The company only has a very simple balance sheet. It only has equity and it has no debt. So the company is raising money by selling shares primarily to institutional investors. So institutions are buying Bitmine's stock, and then the money that's raised, and it's been running at about $1 billion per week. So institutions are buying about $1 billion worth of stock every week, is used to buy Ethereum spot. So just buying the Ethereum token. There are 3 or 4 exchanges that are executing the trades for Bitmine. So the purchases are being made, in conjunction with crypto exchanges buying Ethereum for us, and then it's held in custody. Yes and no. I mean, Bitmine is able to use very sophisticated strategies to acquire Ethereum that maybe a traditional investor may not have access to, because a traditional investor may go into a crypto exchange and then just buy spot.
Yeah.
But if you're buying $9 billion worth of Ethereum, you can't buy it straight, because then the price would just go to the moon.
Hopes.
Yeah. So it's important to buy Ethereum when there is liquidity.
Oh.
Meaning it's really important to buy the purchases without driving up the price. And it's possible to do. There's many ways, but as a company, we haven't revealed our strategies. But ultimately, the company last week announced it had roughly 1.8 million Ethereum tokens. So it's bought a lot of Ethereum, but it's bought it very quietly.
And it's a secret.
Yes, because we don't want investors to front run what we're doing.
Yeah.
Because that would just drive up the price.
Yeah. So
One can create an Ethereum treasury because we've seen it in Bitcoin. There's 53 Bitcoin treasury. But there's really only a handful that have come championed by institutional investors. So of the 53, I'd say only 3 of them actually have institutions buying the stock. MicroStrategy, MetaPlanet, and Semler.
Tom Lee talks about what makes Ethereum special. First, demand is the reason. Wall Street has chosen Ethereum as the platform for the creation of stable currency and tokenization of assets. Also, this is not just a guess. It is supported by U.S. laws like the Genius Act and the SEX Project Crypto. These rules aren't slowing down the tide. They are making it possible for billions of dollars to come to Ethereum by giving it fuel. The second reason is yield. Businesses that own cryptocurrency can stake it and make a steady income because Ethereum uses proof of stake. This turns Ethereum into a useful asset instead of just an investment. This isn't just a guess for businesses, it's cash. The income keeps adding up because the value of the asset keeps going up. The plan is easy to understand. Institutions give out money. The price of an Ethereum share steadily goes up because that money is being put straight into the cryptocurrency and then staked to make money. It turns into a flywheel. More money is being staked on Ethereum, and as more money comes in, its value grows faster. MicroStrategy showed how this strategy could be used with Bitcoin, where the stock often did better than the coin. Bitmine is now using the same strategy with Ethereum, giving investors more power than just holding Ethereum. Let's look at some more interview clips.
Correct. That's right. So the other ones are not going to be successful growing the crypto held per share. Because that's the most important distinguishing factor of a crypto treasury is to grow the holdings per share. So when we look at the Ethereum treasury space, Bitmine has already separated itself because it's far larger than anybody else by almost 3 times.
Yeah, it is.
And the stock is one of the most liquid stocks in the world.
Mm-hmm.
So a way to measure that is trading volume per day. Bitmine trades at about $2.6 billion of stock every day. It is the 20th most traded stock in the United States. And when a stock is liquid,
Mm-hmm.
it attracts institutions because institutions only buy stocks that are liquid. They want to be able to get in and out of a stock. And that's why Bitmine has attracted so many institutional investors. Also, in terms of size, Bitmine's market cap is around 10 billion currently,
Mm-hmm.
which makes it one of the largest stocks in America today. So institutional investors have to buy large companies because that's going to be part of their benchmark.
Mm-hmm.
So
Wow, this function, it's like making champions more greater.
that's what they call the power law.
Wow.
That in any competitive system,
Yeah.
the larger players start to have a disproportionate benefit.
Mhm.
And that's why MicroStrategy's valuation is growing because it's the largest. So it's not the smallest company that gets the highest valuation.
Mhm.
It's the largest that gets the highest valuation. Crypto treasuries is, again, 1/3 the size.
Mhm.
And every week the distance is growing. Yes and no. We've written about Bitcoin for a long time, almost 9 years now.
Yeah.
And I've respected the halving cycle because it makes sense. There's a block reward that's shrinking.
Mm-hmm.
So therefore that has some effect on mining and the proof of work, and therefore it should have an effect on price and supply.
Yeah.
But that's really a liquidity framework.
Mm-hmm.
And liquidity meaning, buying versus selling.
Mm-hmm.
There's a much bigger factor driving liquidity in Bitcoin today.
What is it?
Well, there are 2 drivers. One is institutional investors are buying Bitcoin and crypto. Keep in mind that 95% of all Bitcoin has been mined. So there's very little Bitcoin left, 5%. Yes. But, and this is from Bitwise. They had this really great stat, but 95% of institutional investors don't own Bitcoin.
They don't own it?
Yes.
Oh.
So if you think about that, there's only 5% of Bitcoin left,
Yeah.
and 95% of institutions have to buy that 5%. So you can imagine,
That's surprising.
yeah, you can imagine that will cause an asymptotic rise in
Mhm.
Bitcoin's price. That's the first driver.
Oh.
The second driver is that governments are viewing Bitcoin as a reserve asset.
Mm-hmm.
The United States is going to, they're not the only country. El Salvador was the first, really.
Yeah.
And when governments begin to buy Bitcoin,
Mm-hmm.
that's another buyer of Bitcoin that I think is bigger than the halving cycle. So I think that because of institutions and governments, there probably isn't a halving cycle. I think there is always cyclical risk, even with the stock market, because the stock market has bear markets. But my advice to anyone who invests, and this is from Peter Lynch,
Mm-hmm.
there's more money lost worrying about a top in the cycle than in buying good ideas.
Oh.
Okay? Meaning, if you're worried about a cycle top,
Mm-hmm.
you're missing out on all the upside. So it's better to actually own it for the long term. And I'll give you an example. In Bitcoin's case, as you know, since 2010
Mm-hmm.
or 2009, so now we have 16 years, you've never lost money owning Bitcoin if you held it for 36 months. So even if you have a downturn, as long as you own Bitcoin for 3 years, you'll never lose money. So maybe that's more important than worrying about a downturn. First read about Bitcoin and it was under 1,000.
Mm-hmm.
It went to 20,
Yeah.
and then it went to 15. Wow. And then it went, I think, to 50, and then it went to 13,
Mm-hmm.
and then it went to 120. Yeah, but over
Fluctuation.
that period of time, you made 100 times your money. Wow. So we've, and I actually just got an email from a client yesterday that says, that recommendation in 2017 changed his life because he made 100 times his money on Bitcoin. So if you think about that, you only need to have one or two investments make 100 times your money, and then your life is changed forever. And that's what crypto really is. It's an opportunity to bet on a future. But I think that same 100 times kind of opportunity or that massive upside exists with Ethereum today, because it's really one of the blockchains people have chosen to ignore for 5 years.
Yeah,
but there's so many good things happening now.
Hey, Lee's idea is completely new for investors. The most logical thing to do is to buy Ethereum right away. History, on the other hand, shows that strong treasury firms can make a lot of money in a different way. His drawing is very clear. If you had bought Bitmine stock at the start of its Ethereum pivot, the amount of Ethereum backing each share would have grown by 10 times. These numbers show that your risk would grow much faster than if you kept Ethereum in your wallet or used an ETF. It's clear from the numbers. When you buy an ETF, you have the same amount of risk at the start. With Bitmine, your Ethereum share keeps going up. This makes it possible for better performance. Since the price of Ethereum per share has gone up so quickly, an investor in the Ethereum treasury may still make money even if the price of Ethereum drops in half. Lee calls it a supercycle for this reason. It's not just about Ethereum's value going up. It's about a business strategy that gets more exposure and makes money for the company in ways that regular holders would never see. Lee doesn't play down the risks, though there are a lot of volatile naked markets and sudden losses on the cryptocurrency market. Companies with clean balance sheets, no complicated debts, no exotic leverage, and the size to continue raising money even when prices collapse are the ones that survive. He added, the main thing being talked about here is the future of finance in general. There's more to this rise than meets the eye. Moving the world's financial system to a platform that can be programmed is what it means. At its core is Ethereum, which brings in Wall Street as well as money and assets. We are in the storm before the new order. For most investors, the most important question is how to ride this wave without getting smashed by it. Buying Ethereum might not be enough on its own. The supercycle rewards structures that can build up a lot of assets over time. This is more than just a new asset. It has to do with a new business plan that uses that resource. The threat is clear. New players will quickly make the difference between winners and losers bigger because so many more people are joining the game. Smaller competitors won't have many chances to succeed because the big companies with lots of cash on hand and strong balance sheets will win. The winner gets everything in this game. Now is the time to understand it. We are already in the supercycle. The only question now is whether you'll catch it or let it get away. Thanks for your time, and don't forget to like and subscribe.